All right, let's talk about Klarna. You've probably seen that little pink button at checkout. Well, now the Swedish fintech giant is going public, and it's one of the most hyped IPOs we've seen in years. So the big question is, are we looking at a game-changing engine for global commerce, or is this a financial house of cards waiting to tumble? We're going to break it all down for any potential investor out there.
To really get a grip on Klarna's power, you need to start with this number, 93 million. Just let that sink in. That's how many active consumers are on its platform around the world. So you see, this isn't some niche payment thing anymore. It's a massive global network.
And that really brings us to the core of it, right? What in the world do 93 million shoppers see in Klarna? And maybe more importantly for us, what should an investor see? Is this a truly revolutionary platform for how we buy things? Or is it just a super high-risk bet on a pretty shaky foundation? Let's dig in and look at both sides, starting with the bull case.
So, for the people who are bullish on Klarna, they don't just see a buy now, pay later company. No, they see this powerful, growing ecosystem that's connecting stores and shoppers in a way that old-school banks and payment systems just can't touch.
And you can tell the company's leadership is feeling pretty good about things. The CEO himself isn't calling this a lucky break. He's framing their success as the payoff from a long-term strategy, with that network effect finally kicking into high gear. So, does that confidence show up in the numbers?
Oh yeah. The numbers absolutely back it up. Just look at this top-line growth. We're looking at gross merchandise volume, or GMV. That's just a fancy way of saying the total value of everything sold through Klarna. And it's not just growing, it's picking up speed. It just blasted past the $100 billion mark. That tells you more and more people are using Klarna for more and more of their shopping. But you know, that kind of growth usually costs a fortune, or does it?
And this, right here, this chart is the heart of the bull case. I mean, look at this turnaround. After years of just pouring money into growth and taking massive losses, we're talking over $1 billion in the red in 2022. Klarna has swung to profitability. This isn't just tweaking the numbers. It's a complete rewrite of the company's financial story. So the question is, how on earth did they pull it off?
Well, their basic model is actually pretty slick. When you buy something, Klarna pays the store for you right away. They take on the risk. Then, you just pay Klarna back over time. Klarna makes its money from fees it charges the merchant, and sometimes from interest on those longer-term payment plans. It's a neat, diversified model where they earn from both sides of the deal. But here's this secret weapon, the thing that many of its rivals just don't have. Klarna is a bank. Seriously. Since 2017, it's had a European banking license. That means it can take customer deposits. We're talking $9.5 billion worth. This gives them a huge pool of stable, cheap cash to fund all their loans. That's a way cheaper and more reliable model than what most other non-bank lenders have to deal with.
And they are going all in on AI to run a tighter ship. Their AI assistant is already handling most of the customer service chats, which slashes costs. But even more important, AI is supercharging their ability to manage risk. Take a look at the US Gini score. It's basically a measure of how good their credit model is. They've literally doubled it from 0.36 to 0.72. To put it simply, that means they're getting way better at predicting who is actually going to pay them back. And that's huge.
Okay, wow, that is a really compelling story for growth. But the skeptics, the bears, they're watching a completely different movie. They look right past that shiny top-line growth and see a business that's getting squeezed from all sides.
First up, the competition. I mean, it is a war zone out there. Klarna isn't just playing in its own little sandbox. It's fighting a battle on multiple fronts. You've got the absolute titans of finance like JP Morgan, the established giants like PayPal, and then other focused buy now, pay later players like Affirm, all fighting for the exact same spot on that checkout page.
And all that competition hits the bottom line hard. This number right here, 69%. That's how much Klarna's funding costs shot up in 2024 compared to the year before. As interest rates went up everywhere, the cost of the money they need to lend out just skyrocketed. This is exactly why that banking license is so important. It's like a shield. But that shield isn't bulletproof, and rising costs can wipe out that profitability in a hurry.
Now, this is a direct quote from Klarna's own IPO filing, and you have to pay attention to this. A material weakness in financial controls is a massive red flag for any investor. It basically means the company is admitting that its own processes for making sure its financial reports are accurate have serious flaws. It makes you question the reliability of the very numbers we've just been looking at.
And the risk list keeps going. You've got regulators all over the world starting to circle the buy now, pay later industry, with new laws coming down the pike. Klarna is also super dependent on partners like Adyen and Stripe to actually process the payments. And hey, even with those improving AI models, they still had to write off nearly $500 million in credit losses last year from people not paying them back. Even their big strength in AI brings its own risks like biased models or big mistakes that could really damage their reputation.
So, you've got the bull case and you've got the bear case. But for anyone thinking of actually buying shares, there are a few more critical details buried deep in the fine print of this IPO that you absolutely have to know about. Okay, let's break this table down because this part is crucial. Not all shares are created equal here. The ordinary shares that you or I would buy in the IPO, they get 1 vote each. Simple enough. But the insiders, like the CEO, they'll hold Class B and Class C shares, and those get 10 votes per share. What that means is that voting control will stay locked up with the founders and early investors, even if they sell off most of their financial stake. Public shareholders are going to have very, very little say in how this company is run.
And if you're an investor who likes getting a check in the mail, well, don't hold your breath. The company is crystal clear about this. They have never paid a dividend, and they have no plans to start. Every single dollar of profit is going to be plowed right back into growing the business. For an investor, that means the only way you make money is if the stock price goes up, period.
So, at the end of the day, we are left with this one ultimate question. Is Klarna this unstoppable AI-powered commerce platform with a killer banking advantage, just like the bulls think? Or is it a company with crazy high costs, brutal competition, and some serious internal weaknesses, just like the bears are saying? For any investor figuring out which one of those stories is closer to the truth, well, that's going to be the billion-dollar question.